One. We are live. What's going on, everybody? Welcome back to Wolf. Welcome back to another stream, man. We hop on here each week with Mr. Roberts. You guys know him as Infra on X. If you're watching on YouTube, he also has a YouTube for those who like to dive deep into the macro side of things. We have Mr. Joseph coming over, CEO of Milo, Bitcoin mortgages, credit loans, all that stuff. Killing it on both fronts. Joseph was supposed to be on Bloomberg. Unfortunately, he had to come to Wolf Bitcoin. We took him away. We were like, hey, listen, I know you got to go to Bloomberg. You got to be on TV. You got to do all these famous things, famous people stuff. But we're going to get you back on Wolf Bitcoin. So we're able to bring it back here. We're going to talk about all the things going on in the markets. We got Bitcoin. We have some oil stuff we want to talk about and a few other things in the markets. And so if you guys are excited as I am, please do take a second and repost the stream or quote tweet the stream, tag a friend. Let people know we're trying to grow the stream out, get more and more people who are into this discussion around housing, around macro, around Bitcoin, into this discussion. So if you guys have any thoughts as well, you want to throw into the chat, please do so. We'll see if we can cover it on the stream. But it's good to have both of you. Joseph, how are you?
Good to be here. Good
Absolutely.
To see you guys.
Yeah, 100%. Robert, how are you?
Yeah, good to be here. A lot going on right now, huh?
Did so much going on. Let me pull up the chart here. I know that's what people are looking for. They're looking for oil. They're looking at Bitcoin. Talk to me a little bit about how you're seeing things in the market right now.
Well, yesterday was a bit different from today. So yesterday, actually, we opened up lower, obviously, Monday being the first kind of full trading day since all this broke out in the Middle East. We gapped down lower, opened up lower, but then just got bid all day. Like basically the S&P 500 Qs ended up closing, I think, slightly higher on the day, but at one point went well into the green yesterday. Yep. So very unperturbed, apparently, equity market. Oil is definitely breaking out of this kind of long-term downtrend. It's not perfect, but there very clearly has been kind of a long-term downtrend in oil. This has helped to be a little bit disinflationary for various inflation prints. PPI did come in hot on Friday. Maybe we can talk about that kind of stuff later. But yeah, oil's been in a downtrend really going back to the last geopolitical event, which was Ukraine. Oil's been in a downtrend, and this is, I think, probably a pretty clear breakout to the upside with oil. There are some pretty wild targets for how high this could go, depending, of course, how everything ends up playing out with what's going on in the Middle East. I think a lot of like macro people, I follow basically like all the macro people, and it's one of those things where like everyone's like rushing to become educated on the Qatari liquefied natural gas facilities and like how the output of them and pipelines and where the pipelines are, and okay, well, if they close the Strait of Hormuz, which facilities can divert. Everyone is trying to become an expert in like the energy infrastructure of the Middle East right now. So it's kind of one of those things where you don't really know.
Every 10 years, everyone has to become an expert in oil.
Yeah. Like I've heard everything from if the Strait of Hormuz and the Houthis close the totally spacing on the other choke point to the south there, that oil could go to like I've heard 150, which would be wild if that happened. Right now we're only at 75. We're up about 15%. So the market was definitely moving higher, going all the way back to late December. This has been kind of a building concern for the oil market. It's been getting priced in to some degree. I think that like I'm not a geopolitical expert, but what we're seeing right now is pretty bad. Like maybe I'm crazy, maybe it's really not that bad, but it seems pretty bad on a number of levels. You have a full-blown regional war now. It is not like it was back here, right? The last time that oil had a big move. This was when we were bombing Iran, the nuclear facilities, and it was kind of this much more limited sort of operation. This is not that. This is a full-blown regional war now. France is getting involved. UK, I think, might get involved. You have Saudi Arabia now looking to attack Iran. I think the UAE has already maybe attacked, if not is announced, has announced that they will. So yeah, it is, it feels to be spiraling out of control. And I'm starting to get old or something, because I remember back a while ago, Saddam lit his own oil facilities on fire, his own oil wells, and destroyed some of his own, sabotage some of his own infrastructure. So, it could get even worse. Right now, we have the Strait of Hormuz effectively closed. The state of Iran, or whoever is left there, has basically warned any ship transiting that they will be fired upon, and they have. They fired upon, I think, 2, if not 3 different vessels that have been going through the strait. And, a lot of people were pointing out, kind of over the weekend and whatnot, like, well, they don't have the capacity to actually close the strait, right? To actually do like a blockade with their naval forces and mine it, right? And actually like physically close it. And I kept pointing out, like, over the weekend, they don't have to actually physically close it. All they have to do is get the insurance companies to think that it's closed, right? And so they fired on a couple of ships, and they announced very publicly, hey, the Strait of Hormuz is closed. Any ship, going through will fire on you. That was kind of enough. So today, probably what took Joseph away from his appearance, today we found out that Trump is going to be backstopping through some obscure organization I didn't even know existed, to be honest, backstopping that insurance for the ships.
Definitely. Joseph, would love to get some of your input as well here.
Yeah, look, I mean, I think that it's definitely in this situation where with something like this, you would expect, oil prices to rip higher. I think the question is like, how much destabilization happens. I would say, the sequencing of basically saying, here, let's deal with Venezuela. Let's try to shore up some of our oil here, right? Let's try to basically get our hemisphere in check before, we start messing around with the other side, right? That seems to probably be the reason why oil is probably not at like 90, right? Even though it's going to take a long time to be able to get, Venezuelan production back to its old glory days. That's going to be a slow process, but nonetheless, I think that is, buoying some of the immediate price shock. Now, I think the bigger question is, do we think this is like a 30-day thing, or do we think this is like a 6-month thing? And right now, I think from this, it feels like everyone expects this to be fairly short term, because if not, it would be significantly higher in terms of sort of like forward production, because everything is stopped, right? Like, ships are not moving, oil's not moving, it's not getting refined, right? It's just nothing's happening on that side of the world. And, if you start to see that, where the belief is this is going to be a longer term thing, then yeah, you're going to start to see basically forward prices, because no one's going to be able to pick up the slack.
Yeah.
And naturally, right, markets are going to get tighter. You're going to see a lot of oil. Now, the opposite side of that is, as long as oil continues to be produced, refining is going to basically slow down. So like you're going to have some of those dislocations in the market, but then you're still going to have a lot of oil that's going to come back into the market at some point in time. So as long as you still see production, and now if you start to see a lot of these countries stop production because of concerns and bombing and everything else that could come with it, then that starts to basically tighten supply. So we're kind of like, this is probably the expected reaction, but I don't think anybody's kind of saying like, okay, like this needs to be at 150. I think this is more of like, okay, how aggressive are the measures going to be made, right? Like how desperate does Iran get? And then, what's sort of like their end game here? And, is there one? And, how much damage do they do in the exit? And, I think from prices looking at these levels, I think markets are saying it's probably not going to be as bad, right? As maybe like the headline is.
Yeah. I mean, I would say, like, from what I gathered from kind of the geopolitical folks, like, if you would have told them a year ago, the Strait of Hormuz will be closed effectively, right? Iran will be not only bombing, Israel and sending ballistic missiles into Israel, but also targeting Qatar, Dubai, Bahrain, and Saudi Arabian oil fields. Saudi Aramco had I think a drone that made it through, that took out part of the Saudi Aramco field. I think that, like, you would expect them to say, wow, things are really bad. Like how does it really get worse from here, other than like Joseph mentioned, time, whether or not this is a week-long thing, 2 weeks, or whether it ends up being 6 months, 12 months, 18 months. I hope it doesn't become another Iraq, but, I was kind of growing up during that. And I remember as a, 13, 14, 15-year-old watching, people not too much older than me come home every, CNN would play the flag draped coffin thing, the when they would come home and land. And I remember that like as a teenager, because, those kids were not too much older than me. I grew up in San Diego, so I kind of had like a very, military centric sort of upbringing. And yeah, like, I remember that dragging on and 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 on. If that is what happens here, I think that, 75 is probably significantly mispriced, especially if they start to target some of their own infrastructure. Now, I'm not a military expert, but I think it ultimately is going to probably, from what I can gather, come down to who can produce munitions, right? Like silly things that, Cade, we've had so many streams, so many spaces where I've brought up these issues, and I've always framed it, at least partially, I framed the national security perspective, right? That the angle of it where, look, like if we can't even make enough munitions to defend our people, what are we even doing here? Are we even a super? So I think that that's ultimately what it might come down to. I think it was today, maybe it was yesterday, but U.S. is targeting some of the factories that Iran uses to manufacture some of the suicide drones and ballistic missiles. But right now, like it's not looking too hot for the U.S. when it comes to our ability to actually produce some of these pretty advanced weapon systems that we need right now, like the THAAD. It was someone in the cabinet, I forget exactly who, that said that right now we can only produce like 6, 7 of these THAAD interceptors a week. Not good, right? We're rapidly depleting our stock that we might have had built up. But once that stock is out, like what are we going to do? We have, dozens, if not hundreds of different facilities over in the Middle East, various consulates, various CIA outposts. I saw news just an hour ago, CIA outpost, office, whatever, in Saudi Arabia got targeted, right? We have so many different facilities, especially once you start to consider, even if there's not an American flag on it, if it's in the economic interest of America, right? Saudi Aramco is not an American company. They are not in America. They're in Saudi Arabia. They're a state-owned oil company in Saudi Arabia, but yet Iran targeting the Saudi Aramco fields, that has a direct impact on the people that Iran feels are perpetrating the war, which being kind of the West or US, in Israel. So they don't even have to once you start kind of opening up your scope, your aperture to the number of targets that Iran has potentially in their sights, it's going to be difficult to defend if we can't produce and we know we can't produce the weapons or the missile defense that we need to defend not only all of our embassies, not only all of our outposts and kind of ancillary buildings, but also all of our economic interests. If we don't have the industrial capacity, and we know that we don't, if we don't have that, then what's going to happen in a week or 2 or 3 or 4 where, the THAADs and the Patriots are depleted and we can only produce, 10 a week and they're sending 10 a day, does it just mean that we just have to sit back and start accepting huge amount of casualties, huge amount of economic damage? I know that it's heresy, to even suggest something like this, but, Iran's GDP is like 1/50th of what America's GDP is. Yet if they can actually produce the munitions that they need and we can't, after a certain point, right? We have stockpiles, but once those stockpiles are empty, if Iran can outproduce us, that we saw this issue in Ukraine, by the way, Russia could outproduce us, which is why effectively we lost a proxy war to a country with 1/12 of our GDP. GDP, what good is GDP when it's all a bunch of high frequency trading algorithms and boomers, buying houses from each other and like tech algorithms and stuff. If we can't actually make real physical things, there's a serious possibility where like we could actually start to like get much more on the back foot than I think we would like to be. So it's going to set up an interesting conundrum for them. Oil is just kind of, I think, the main pressure point, because of course it's midterm elections and they know that. And so inflation is going to be, I think, one of their pressure points.
Yeah. And what's unique about oil is, there's this aspect where, if we do have geopolitical uncertainty, we have consumer confidence eroding because of some of this, right? Like people are not going out and spending, or they're not going to travel because they're concerned, right? Like nobody wants to go to that side of the world. You're going to get a softness in the economy, which is basically going to, taper, oil demand. So it's interesting because like as oil goes up, producers are incentivized to bring in new production, right? Shale, Canadian sands, right? Like everything that we produce here in the US. So we could actually increase production at a level where I don't know what that break even point is, but it might be 80, right? So you could see the dial and production increase pretty rapidly because we have slack in production. And at the same time, right, if you do start to get a slowness and a softness in China and other places, right, you could buoy it, right? So I think that's why it's very hard to say, yes, if you were to look at oil on a singular variable, yes, it should be significantly higher. But as you start to overlay these other aspects, you would see more production come online at higher prices, which would then basically taper it again right back down. So that's why I don't necessarily think that we're like in this like cyclical uptrend of oil prices, right? It's more of like a blip, and then it reacts, and then we see it drags on, and maybe a little higher. But again, I wouldn't say that like we are now in a definitive uptrend where because of this, you should be long oil, right? I don't think structurally. I think there's significantly more production that is going to come online, right? Venezuela, produces 500,000 barrels today. They used to produce almost 4 million, right? They were the third largest producer in the world, and we just basically reined them in a situation where like the capital investment is going to come online. So to me, for oil prices to be high, knowing that over the next 24 to 36 months, you're going to have significantly more production without any repercussion to say, I actually care what OPEC thinks. We're going to produce oil. We're going to refine oil. The world is going to be awash in oil from our side of the hemisphere, and maybe less dependent on the Middle East. So that's one of the reasons why I'm not necessarily like long-term bullish on oil in spite of what's actually happening.
So, but the Venezuelan point, like potential supply, wouldn't it take, from my understanding of Venezuela, like there was decades of underinvestment in their infrastructure in Venezuela from, the communist regimes.
But you can get oil. Like there are places in Venezuela where you could literally dig a hole with a shovel and oil will spew out of the ground.
So if you already have an area located where okay, all we have to do is get a well here. If you have the location already, like what is the lead time to actually getting oil out of the ground?
It just depends. Again, a lot of the infrastructure that was put in place there is stuff that PDVSA put in, 30 years ago, 20 years ago. So, it wouldn't take much to bring in more modern production and equipment and significantly increase output, within 6 months, right?
6 months. Yeah.
So you can definitely do that because again, so much of it was like just legacy infrastructure where there wasn't the foreign investment into production. So you were maintaining obsolete, very, very antiquated equipment where now you had diminishing production, but no one was investing capital into it. So if you bring in some of the newer technology, right? Like, they don't even have to go into like shale and fracking or any of that stuff, right? Like they're so, they've got some of the most density and sort of like oil in anywhere in the world, that you can really bring that production online with not $100 billion, but with billions of dollars over time. And there's a ton of pent up demand. So you're going to have that where that at some point in time, you're going to get millions of barrels back online. Questions over what period of time? And if you say, okay, well, like whatever's happening in the Middle East, do we think that's going to be around, or is that going to be going on for 6 months? I doubt it, right? I really doubt that this is going to be that long-term thing, because again, I don't think this is going to be one of those things where like Ukraine was very different because US was involved, but they didn't want to be directly involved. Here, it is US is directly attacking Iran, right? There's no confusion about what is happening. There's no political games. It is the US, right? Like we are saying we are doing this. We want to do this. So I don't see the administration as being someone that wants this to drag on. Like there will be an escalation to the point where there is like a chokehold on the situation. And I don't know whether that happens in 3 days or whether that happens in 2 weeks. But I don't think that it's going to be one of those things where we say, yeah, this is going to be like, a long drawn out event, especially as you're starting to see people that, you would have assumed would have been Iran's allies, which clearly are not, because of the game theory that's playing out over there.
Yeah, I mean, they're a country. I mean, they're not Venezuela. They're not a tiny. They're not Yemen. They're not Libya. Like they're a legitimate. Now, look, they're not anywhere close to China or America in terms of kind of economic capacity and development, but they're also not like necessarily like a tiny third world nation. I mean, they got 90 million people. It's a pretty large country geographically. There's some challenges. I know, growing up or, my adult life, living in LA, like I've known quite a number of second generation and first generation Iranians. And, just from conversations with them, it sounds like, again, I'm not like a history major on, I didn't write a thesis on this or anything, but just my personal experience, like it sounds like the people themselves are quite divided, I guess. And so in terms of like, the transition or regime change or that sort of thing, given the division that it sounds like is present within, it's not like two parties like it is here. There's all these separate groups, maybe 8, 9, 10 kind of individual groups that like each one is it thinks they're its own thing. When you have that much of like a division and kind of incongruentness, it seems like it might be difficult to have this just be done, especially if we're maybe rationing the amount of munitions that we can expend, because we're already starting to become kind of like yeah, maybe I'm just pessimistic from jaded from what happened in Iraq, but I don't see how it's just done one day.
Well, I think that's the question, right? When you think about these events, it's like, well, like how do you know if you've won?
Yeah.
Like what is winning in this scenario?
Well, and Trump was asked that yesterday, and he didn't have an answer, which is not reassuring,
hard, right? Because again, in theory, right, we won in Iraq, we won in Afghanistan, but I don't think we really won, right? Post fact, right? Like I don't think anybody won, right? If you look at the refugees that are scattered all over Europe and around the world, right? I don't think anybody felt that they won in that outcome, right? So in this case, what is winning, and how do we know when we've won, right? You could measure it saying here, like well, they don't have a leader anymore, right? There's someone else. So I guess technically the way we defined Venezuela, we won because Maduro's not there, but technically the same people that were making decisions are still there. So people haven't defined that as winning. So I think that's probably like the most challenging here, is that like we may not know when we won, if we won, right? Or can we win, right?
Yeah, I think it might be more difficult than they like. I get the feeling just from kind of tracking like their public statements and kind of what we have publicly available. I get the feeling that like we might have gotten into a situation where we kind of bit off more than we can chew, and like it's escalated a lot. Like if you go back a year or 9 months or before this broke out and told said, okay, yeah, the Strait of Hormuz will be closed. Iran will be targeting, oil infrastructure in Saudi Arabia. That was always threatened as like the nuclear option.
That wasn't on the 2026 bingo card.
Yeah, yeah, and like we're getting all of it, and so it feels very much. Again, I'm not a geopolitical expert, but like it feels from what I'm gathering that it's starting to like it, or it's already kind of spiraled into a situation where it's a full-blown regional war, and we've kind of lost control over our ability to exert our timeline of choosing, right, and our plan, if there was a plan. It feels just kind of like it's all gotten away from us. And then you add in the domestic politics of this ahead of a midterm. People are already quite unhappy with this, from the polling, inflation from higher oil. Like, it just seems like, how are they going to exit? How is this all going to come to a conclusion?
Yeah, I think that the interesting part of just looking at, what is our favorite topic, right, which is Bitcoin, right, is just like how you now have a strong bid for prices, right, where we've bounced around it, where significant amounts of Bitcoin gets mined and produced, in Iran at very, very low prices. And if I don't have the data around this, but I'd be fascinated to see what is the actual activity in that part of the world right now, just around Bitcoin, if that ends up being the lifeline for a lot of these individuals, moving out of their local currency into Bitcoin. And Bitcoin coming into a situation where generally when there's inflation, geopolitical risks, uncertainty, turmoil, that's when Bitcoin actually does really, really well, because that becomes a lifeline for so many individuals. So to me, that is probably like the other side of this, where I think it's fascinating, because you would have assumed issues around the world, like, hey, Bitcoin's down, and then here it is, like, this is something that I think is probably stabilizing prices, just to measure sort of like where flows are going.
Yeah, their currency, at least according to this, versus the dollar, is down by 96% from December 2025 till now. And when I looked at the price of gold in Iranian currency, it was up some absurd amount. So yeah, they definitely need any lifeline they can get. And yet, look, Bitcoin has been holding up, pretty well. I'm actually kind of surprised. I'm glad I didn't sell my Bitcoin and go full DLT, because it's holding up pretty well. So glad I didn't go short or anything crazy. Try to get cute with it, because
that's why, like knowing where the flows are, like where the global flows are, like if there's a way of getting that data, I think that would be interesting, right? To either say, look, this is the reason why Bitcoin's up, or not, right? Just to sort of like point that out. It would be, I think, an interesting thought experiment.
Yeah, it looks pretty strong to me. I mean, this looks like a pretty good base so far. Look, it's tried
to
like
70 yesterday, right? So like, we rallied from 63, 64, right? Looking like we were going to probably break down again, and then this came out, and we retire, right? The initial movement when the announcement came out Saturday morning, right? We were at 67 and traded down to 64.
Yeah, and it was interesting over the weekend when everything was breaking out. Bitcoin and gold. So gold wasn't trading, but Pax Gold. I still don't know what it's really. Yeah, Pax.
Yeah, Pax versus gold.
Yeah. It was trading inverse to Bitcoin, which I thought was interesting. So here in white is Bitcoin, and in blue is gold. It was trading almost like tick for tick inverse, right? Bitcoin ripped here, gold dumped here. You had Bitcoin selling off, but gold, or
I think that's like,
gold.
You can't carry a gold bar, right? I think that goes into the edge, right? Like if you're having issues and you're concerned, right? Like you've got some digital form of value, right? Which is Bitcoin, where here you've got gold, which doesn't really trade. And I think I've always thought that Bitcoin would be a leading indicator of market sentiment, right? Just primarily because it trades 24/7. It's so global, it's so liquid that so many other asset classes, right, don't have those features to it. So you get a better read on at least the initial move, and telling you something here where even gold is probably more lagging in terms of not having markets open, right, 24/7, and fairly liquid and more mainly institutional, where I think Bitcoin is probably more retail driven, right, around flows, right, necessity.
Yeah, and Pax Gold is probably not. There probably wasn't a ton of volume and liquidity. I don't know. I can't imagine.
Yeah, market makers are probably not very active, right, in that over the weekend.
Yeah, it was really kind of these two moments that caught my eye, where You had Bitcoin sell off quite sharply and gold was ripping, but then you also had this moment here. I think there was some kind of escalation in the conflict, and you had Bitcoin rip higher and gold sell off. So yeah, I just thought I don't know. I still think that Bitcoin will like take some time to show its value proposition or the benefits to gold. I think that like, you know, just like anything, you learn through experience. And so I think that as the world, you know, collectively experiences more more situations where there would be issues with gold, you know, I don't think we're going to have this collective global realization overnight, and we're going to suddenly move to hyper Bitcoinization and everything's great. Like I think it'll probably drag on and take like, unfortunately, a lot of uncomfortable kind of geopolitical situations, domestic politics, you know, maybe coup or civil war, like in a different country, right?
It's a great
like,
way of basically macro views, right, in real time is to be able to get exposure into Bitcoin or out of Bitcoin, right, and even hedge yourself, right, as you can sort of put on certain type of, you know, derivatives to reflect your views on the world.
Do Deribit options trade 24/7? Too?
I don't think so. No.
Okay.
Well, no, I think no, they do. It's just a question of like how much liquidity there is at given points in time in the market.
Yeah.
Right. But you're not going to be able to do it through like the CME, right? You're not going to be able to do it.
Yeah.
By the way, did you get this? I don't know how recent this is. I believe this just came out. I don't have a timeline on this one. Let me share screen really fast. We'll go back to Roberts here in a second, but this is from President Trump in regards to the Genius Act. Have you guys seen this? This was like in the last 15 minutes or 20 minutes or so, I believe.
No.
Okay, so this is from Genius. I'll just read it out really fast. I think I'll read the whole thing. Let's see if we can zoom through it really fast. But the Genius Act is being threatened and undermined by the banks, and that is unacceptable. We are not going to allow it. The United States needs to get market structure done ASAP. Americans should be earning more money on their money. The banks are hitting record profits, and we are not going to allow them to undermine our powerful crypto agenda that will end up going to China and other countries if they don't get the Clarity Act taken care of. The Genius Act was the United States' first big step to make the United States the crypto capital of the world, and getting the Clarity Act done is the next step to finish that job, and most importantly, keep this big and powerful industry in our country. The banks should not be trying to undercut the Genius Act or hold the Clarity Act hostage. They need to make a good deal with the crypto industry because that is what's in the best interest of the American people. This industry cannot be taken from the people of America when it is so close to becoming truly successful. Thank you for this attention to this matter, President Trump. I guess just general thoughts on this, knee-jerk reaction. Joseph, anything?
Amen.
Amen. I was going to say, I was waiting for that.
I mean, look, I think that it's the banking industry, right? I mean, they're one of the most powerful lobbyists right out there. So, you know, it's no surprise. I mean, I think that, you know, they had their henchmen prior to this administration out there, right, trying to undercut the crypto industry, and they wanted a path to basically leave the door open to be able to come back to it as well. So, you know, I think it makes sense, and you know, I'm really happy that he's continuing to stay on them and not let them, you know, I would say, weasel their way out of this and to backtrack some of the progress that's made. So, you know, I think it's great. I think the fact that it's out there, unfortunately, right, this is going to be conflicted with, you know, everything that's happening in the Middle East and all these different aspects. But sounds like we're still on the gas, right? You know, no one's backing away from this one. So I'm glad to see that.
What are your thoughts, Robert? Anything?
Yeah, I mean, I think it was like 9 months ago. You know, I had some cash. I was, you know, paid off all my debt and things were good. And I was like, you know what? I'm going to check. I mean, I already kind of knew the answer, but I was like, I'm going to check what a savings account would yield if I open it through Wells Fargo. You know, there's the little thing there, you know, open a savings account with us. So I click on it and it was like 0.2% or something. And that was the platinum savings account. I was like, this is insane. When USDC or USDT or, you know, whatever, these stable coins offer, you know, basically Fed funds. So yeah, I think the banks have been anything that gets the banks to actually compete. Because to me, it's insane that they can take my deposits, right, at 0.1, pay me 0.1 or 0.2,
Oh, yeah.
0.3, whatever, and then go get IORB from the Fed,
Yeah.
right?
Mm.
IORB is risk-free, literally risk-free.
It's a license to print money, right? I mean, they have the
Yeah.
ultimate stable coin in the form of deposits, and they don't have to give the consumer anything, and they don't have to guarantee anything. And I think that,
Yep.
to me, like the most, I would say, insulting aspect of all of this is, banks have these protections in place, right? Like the reason why they're able to run this business is because they have the backstop of the government, right? And the FDIC and all these programs that allow them to basically function in this way, right? Like if they had to basically hold equal amounts of reserves for the lending that they put out, right? Like they would have to operate their business in an entirely different way. So they have the protection of the government, they have the incentive, they have the backstop, they have the repo, they have the Fed, they have all of these mechanisms. And now for the first time, there's something that can actually come in and force them to have to compete for customers' businesses. They're fighting tooth and nail for it not to happen, right? They're saying, fine, like we'll give you the stable coin, we'll play there, but like we're not going to give you anything else. We're not going to pay you on deposits. Like why would you not pay on deposits, right? Jamie Dimon saying that like, yeah, like if they're going to be able to pay on deposits, then they have to be regulated like financial institutions. Okay, not a wrong thing to say, but then in that case, then they should have access to the Fed. They should have access to all the other mechanisms as well, because they're playing by this unfair advantage. So if you're going to regulate these companies like that, that's fine, but let's all get on an equal fair footing, and then let's see who competes on product offering, on terms, on conditions, and then we'll see how your business stands. But you don't get to basically preach that like you're more regulated, but then you want the privacy, you want the protection, you don't want anybody else to be able to play the game. And expect that that's fair. But again, I think it's never been more obvious what they're trying to do, when in the past it wasn't really clear because a lot of this was like behind closed doors. Now, we're seeing the president specifically call this out and put it in the public domain. And I think that is probably like the biggest shift, is that as consumers, we now know the game. We've always said here, like banks don't pay us any money. They don't do this. We just didn't know why, right? It was always like, well, it's because they're protecting you. It's because FDIC costs so much money. It's because if not, then like, we're going to allow the criminals to like open up bank accounts. But yeah, like all of that happened anyways. It wasn't that game to be able to like take your money, pay you nothing, and give it to the government and earn money for free and lever up their books. And then if they mess up, then the government was there to bail them out. Like that game has always been known. And now the rules that were put in place for banks were put in a pre-crypto tokenization blockchain world. So now we have the possibility for an alternative system, and they feel threatened, right? And it's right that they feel that, because they know that if a lot of these things are put in place, they might be fine in 5 years, but I don't know where they're going to stand in 25 years, in 30 years, right? Like the long game might be very, very, very different. I would question where banks fit in this world, because the last time I checked, if the FDIC really had to pay out, there probably wouldn't be as much to pay out as consumers think there would be. The banking system might already be insolvent, right?
Wow.
Probably.
Yeah, and the DTCC, their insurance fund, I forget what's called, but the DTCC, their backstop is 55 trillion, I think. Is nowhere near what could possibly be needed. I'm sure the FDIC is no different.
So I think from like the government perspective of like why they would allow this to happen, I don't think there's another administration that would be fighting this hard to get this done, and then really drive competition for consumers.
That's probably true.
Because all the other administrations, they knew that there was this pact with the banks that we all have to basically play the game. And the moment that anybody stops playing the game, then we know that like we're insolvent. So I think they're this administration has said, no, this is one of those fights that we're going to push. We're going to call them out. And hopefully like this is one thing that like we'll know whether we have won or not. And to me, that's the clarity actually.
Yeah, there's actually let me see if I can find this video. And Robert, if you want to respond, feel free to. There was a video I'm trying to track down right now in regards to these banks here. I just found it. It was in my drafts actually, so I'll just post it so we can check this out. I want to get some of y'all's thoughts on this. Okay, let me share screen here. Share tab audio. Let me know if you guys can see this. Should be the right page. Okay, this is Ray Dalio. Just tweeted this like 6 seconds ago on the central banks. Well, I guess I'm not sure if we're gonna be able to play this whole clip, but okay, never mind. I'm not gonna play the whole clip. Basically, he's not. People are saying it's potentially a little bit of FUD here. Central banks are not going to want to buy Bitcoin, and we just mentioned, with the central banks and the banks just in general, they lose a little bit of leverage. With certain movements, they lose a lot of leverage, and so I'm kind of curious on how you guys would react to this. I don't want to play the full clip, but the idea that they would be stacking Bitcoin versus coming up with their own blockchain, their own cryptocurrency. Obviously, Tom Lee's pretty much all in on Ethereum. He thinks everything's going to be built there. And so he's thinking he's going to cash out with Ethereum, being just an absolute rock star, I guess, over the next few years in terms of tokenization, all the assets coming on chain and stuff. What are your thoughts on that statement, I guess, from Ray Dalio?
I mean, I'll take the first crack at it. I mean, I think that, if you think about like banks and treasuries and all these assets, right? It's just a bunch of zeros and ones, right, on spreadsheets. Yeah. The ability to basically say, okay, like how much paper cash is out there, like how much is actually, and who has it and where does it sit? A lot of it is out there, but it's accounting games, right? And I think probably a lot of double counting. I think the moment you basically take Bitcoin in the equation, it becomes much more transparent because there's a finite amount of it. So either you have it or you don't have it, right? At some point in time, if we all say we have Bitcoin and there's more Bitcoin than what we said is out there, then something's off.
Yeah.
So
that's how we got in this mess a little bit. Like people are like, wait a minute, are you guys backing this with anything, or is this sort of just like
the
you guys telling
us? Taught us that, right? Things were cross collateralized. We all thought we were, we had certain type of exposure, and in reality we didn't because we all were facing everyone. And and the only time that like you've experienced that in the crypto industry was like during like 3 arrows and a lot of the situations where things were cross collateralized. And in the end, you go back to default and say, well, like I thought I had good collateral, but you didn't have good collateral. So I think that those games become much harder for central banks buying Bitcoin to play that. So I think it's more of just like how the game is played and less of like, hey, this is, it's almost like they go into the game knowing they can cheat. So why would they play a game knowing that they can't cheat, right?
Yeah, exactly. Yeah, I don't think that central banks will be buying Bitcoin, at least not for a while. I think eventually there's a point in time because, a central bank can't print gold either. But granted, I guess you could make the argument you can play games with rehypothecating gold. I would argue that, we're probably able to do that with Bitcoin with some of the products that we have now on the kind of paper Bitcoin side. So we're not like totally immune. So yeah, like I think, I think that is the general direction that things are moving. Gold, neutral bearer assets that are relatively scarce. I think that's kind of the general direction things are going. But like, but the Fed buying Bitcoin, I think like maybe eventually. But like Joseph said, what is their incentive to adopt a technology that is antithetical to their entire kind of modus operandi? Like why would they? And
well, Robert, when Bitcoin was pumping, I remember people would say, well, like if they don't, they're going to miss out on a massive return on investment. Like when Bitcoin was at 100, that was the narrative I was hearing. What do you think about that statement?
Well, look, like technically, would it be a smart idea for the government to print dollars, which we can do here? By the way, physical currency is about 2.4 trillion. Bank reserves, which are kind of the foundational monetary unit of the banking system, 2.9 trillion. In weight is M2, 22 trillion. So this includes things like customer deposits, right? You have money in a checking account, a savings account at a bank. That's 18.6 trillion. The rest is, money market funds and CDs and that kind of thing. But 22 trillion of money that Americans think is theirs. There's only actually like physical currency. There's only 2.4 trillion. And even if you add that to bank reserves, you're still a far way off from actually, so it's all leveraged. The entire system is a leverage built on more leverage. Even if you look at, full M0, which is the two of them combined, you're only at 5.4 trillion. So even just here, right, from M2 to M0, M0 you can think of as kind of the government money, right, physical currency, which is controlled by the government, and then bank reserves controlled by the Fed. That's 5.4 trillion. We're basically already talking about 4x leverage in the system. We also kind of know, by the way, that banks don't really necessarily have to. The fractional reserve lending is not necessarily as much of a constraint. We know, for example, the reserve requirement for the banks still, 5 years, 6 years later, is still 0%. Now they have the SLR and LCR and other regulatory limits, but people can go look right now. The reserve requirement is 0. So the banks are able to essentially print dollars. I think a question that might be worth asking is why they are not. If you look at the rate of change of M2, this is broad money, and what most people track is just kind of M2 like this. But if you look at the rate of change of M2 and look at, for example, the 6-month rate of change, you can see that the rate of change, the growth rate of M2, peaked out in mid-2025 and started to roll over, only right now running at 1.4%. So banks are not really lending because, again, we're a debt-based monetary system. When a bank creates a loan or they loan money into existence, that money is essentially created. So we know defaults are ticking up. We know charge-off rates.
A big issue for the banks, for the regional banks, and for the deposits is it's a deposit issue, right? It's significant. Like they probably would be lending more, but a lot of the deposits flew over into institutional money markets. Right?
Yeah,
because now the banks were competing, right? So like, if you're a consumer, why would you keep your money at Wells earning 1 basis point when all you have to do is just like move it to your Robinhood account or to any one of these accounts and earn money market at 3.5%? And the advent of technology has made this significantly easier, where in the past it would be pretty hard because you'd have to buy T-bills, you'd have to roll them, you'd have to do that. Now you can just basically click 3 clicks and you can earn yield, right? So they've already seen hemorrhaging deposits to a competitor. The next one would be stable coins and and sort of the crypto ecosystem, which is, again, right, it's another one of those aspects where they don't have excess deposits, right? They're defending their deposits every day, which is, in their sense, right, they actually want rates to come in lower, because then now you're just paying for basically safety. But right now they're losing, they continue to lose deposits all the time.
Yeah, I wonder how willing the administration would really be, though. Like I get what Trump is commenting there, but like I was not alive for it, but from what I have been able to like read and study about Reg Q, that was kind of the last time the U.S. government tried to come in and offered policy that really kind of started to disintermediate the major banks, and it was not pretty, So is this administration really willing, to tolerate, rolling recession? I don't know.
Yeah, I don't know. I just know the bank lobbyists. It's a very, very powerful organization that.
Totally.
Yeah, and that too. Look, like I'm just cynical, but like I don't really think I know he ran on being an outsider and draining the swamp and these new innovative
there's just no incentives.
Embracing.
There's no incentives to make it make it happen,
Yeah, it's like on the list of priorities right now, especially with what's going on in the Middle East. and in midterms, and kind of, you know, the approval rating quite poor. Like, is this really what they're going to spend their limited time on? Personally, I would say probably not, and it's just kind of cheap talk from Trump. There's, you know, with Trump, there's a lot of cheap talk. If you saw like Scott Bessent, you know, really pushing, then I would start to kind of like think, okay, maybe there's more to this, because you know, we're actually kind of in a technocratic way, kind of going at how the system actually works, how the banking system actually operates. Maybe we see, you know, with this kind of revolution at the Fed, maybe we see fundamental foundational change at the Federal Reserve. Like, I put out a video like a year ago, it feels like, you know, kind of hypothesizing that, you know, within the next year or two, we could see, you know, kind of a new blood come into the Fed, that you're starting to hear more people talk about now. Even very, very well established, kind of traditional, you know, coming from the industry, coming from the banking industry, or the Fed itself. David Malpass, for example, World Bank president. So even those sort of people are talking about like the need for the Fed to be reformed in pretty, you know, foundational, structural sort of way. You know, maybe it comes out of the Fed within the next year. You know, maybe we start to see major change going on, and it comes out of the Fed rather than the Genius Act, which has to go through the Congress, and, you know, all the political drama and nonsense of our system. You know, I think I would not be surprised if it's not necessarily the Genius Act where we start to see, you know, some real change, but if it actually comes out of the Fed, which I know sounds crazy, but just given the amount of like discussion that I've heard, kind of floating this idea. Look, even The Atlantic wrote a paper, an article a couple months ago. Even The Atlantic wrote a paper about how Trump might have a point with the Fed, that the Fed is, you know, the sclerotic institution that is desperately in need of structural foundational reform. The Atlantic wrote that article, right? They could not be like more lefty, you know, Trump critic, whatever you want to call it. And even they're saying it, right? David Malpass, coming from the World Bank, like, this guy's talking about it. I've heard him now a couple times talking about the need for the Fed. So I think it's, you know, just as likely, I think, is probably a safe bet to say it's just as likely to come out of the Fed or the Treasury, or a combination of the two. Obviously, we see moves in the direction of kind of a much more of a merger between the Treasury and the Fed. You know, that I think is probably, we probably have a better shot of it coming out there than it does Congress and trying to pass it legislatively, because the banking lobby is just like, it's too entrenched, and with campaign finance, and I just, yeah.
Robert, like that question around, like, you know, in the Middle East, and saying like, how do we know if we've won? You know, you could kind of make the same argument with kind of like the banking infrastructure, right? Of saying like, okay, fine, like we get stable coins, we get clarity. Like, how do we know if we've won? And then what is a better system?
Yeah.
Like for the consumer, right? Because like that's kind of the question that I've been asking myself. Is like, you know, do we want products that have lower rates, right? That could be one thing, right? Well, there are ways of doing that. You bring rates down, right? And then everybody's products come down. Well, do we want people to earn money on their assets, right? Or arguing for yield, right? In stable coins. Well, you can do that, right? Technically, you can go buy USDC, and you can go and you can invest it in DeFi, and you can actually get yield. Or you can go and buy money market, so you can actually get yield. Okay, so technically you can sort of do that. Okay, well then maybe people want to qualify for credit offerings that maybe they don't normally offer. Well, does DeFi or this alternative banking sphere solve for that? Well, the government could essentially backstop some of those products if they really felt that it was important to drive that, the way they do mortgages with FHA, right? Able to subsidize that. So what is it that we want, or what do we want the banking system to do with these, you know, new tools, right, with tokenized assets and crypto rails that we can't already do today? So what are we like, what is the change that we want, and how do we know when we've gotten it and that we've won? And that to me is kind of like this big question as well, is that like we don't like the banks, but we do know that they have a role to play, right? Of
course.
None of us wants to be walking around with a wheelbarrow of cash, right? And be turned around, right? Like we don't want that. So like, what do we want, right? So what do we want from what do we not have from the banks today that we want? And why do we allow a bank to not pay us any money? And it's because we're paying 3.5% for convenience of carrying our cash.
Yeah.
And they take advantage of that. But if we want a new system, well, what is that system? Because today we think banks are pretty safe because of the government. So is cold storage safer? Well, a lot of us want a 1-800 number when we lose our password.
Right.
Yeah.
So what do we want? What do we not have today that we want? And maybe carve out some of those things and say, okay, well, like, can we even solve for it today? Like, do we need some of these rails that we're really advocating for? Just saying like, or have we gotten to the point where like, no, we just want there not to be banks.
Well, I think maybe that's the part of the pitch with STRC. Like Saylor talks about digital credits, buying into some of these, getting a higher dividend payout. Like it seems like that's why a lot of people have jumped in there. And the price of STRC is like, and while Bitcoin's gone down, like they've been able to pay out dividends, like price hasn't been awful. It's like, maybe that's like the start of a conversation. I'm not sure.
Yeah. So maybe greater returns or greater promise of returns, right? Because again, like to me, STRC is not, it's a very small.
Yeah, exactly. Yeah, of course.
It's tiny, right? It's not not a reflectant, right? Like Saylor could have made the number 5 and he'd have takers. He could have made the number anything greater than like 3.5. He would have had takers. Like it didn't have to be 11.5. It's 11.5 because there's 6% of marketing in there just to make the number big enough to get attention. But naturally, right? Like if you said, okay, well, like what do you want? Well, I guess 11.5% at guaranteed returns, or the perception of guaranteed return feels pretty good. But if there was that much demand for it, the number wouldn't be 11.5. The number
exactly.
The number would be 7 because eventually it would float down to basically equilibrium prices, like most free market things. So in my mind, it's not free market. It's heavily subsidized. It's questionable what the recourse is on it. And right now we're comfortable with it because someone's telling you, look, you're so far over collateralized that this thing could go down by 90% and we'd still be money good. But you have no way of basically proving that to me because we may never get into that scenario. But it's a made up number. 11.5, double digit feels pretty good. But I have a hard time saying, like you could comp it to like a bank because there's no backstop, right? Like no one's coming. Say
there's no FDIC for
no one's coming back, right? It's a different type of risk. Therefore, you should get paid more, right? There's a risk premium to that unknown and volatility.
I mean, private credit's yielding what, 9, 10, 11%?
6. Well, private credit, depending, but now you're getting paid an illiquidity premium.
Yeah.
Right. That's what you get with private equity, right? You lock up your money for 10 years and you hope that whoever you're giving that capital to can basically allocate it appropriately. But if you wanted your money back tomorrow, you'd be lucky to get 20 cents on the dollar and you'd have to find your buyer.
And you also have operational risk. Yeah, I mean, I see the value proposition. I've thought about it, putting, a fair bit into STRC. There's just something about it that
you told me something's a little bit. I'm also in your boat there, Robert. I have a couple people I know who put some good money in there, especially in the beginning. I saw some crazy returns, but then I don't know. I'm kind of with you. Like something, I don't want to be in the first cohort of testers, I guess is what I'll say,
Yeah, exactly. It feels like,
I mean, with most things, right? Like you have to be able to show why this works in up markets and down markets and sideways markets. And
that's a good point.
And I don't think that that's been proven, right? Like in the sense that like, this is sustainable, right? Like you can't tell me fundamentally, like, how this yield gets paid other than telling me you're going to perpetually dilute me.
Yeah.
Right. So it's kind of like,
good point.
Like, hey, I've got a good situation here in my right hand, but it's because my left hand is booing it. Right.
Yeah.
So that's tough because sooner or later, like it will catch up. And the argument is, well, if Bitcoin goes up, then we're all fine.
Sure.
Okay? that's fine. But then let's just say this is a bet on Bitcoin prices. Let's not say this is like a stable, repeatable, scalable return or asset. It's a test, which is fine, but it's being subsidized at the expense of shareholders.
Yeah. I definitely would be much more worried if I was in MSTR, the common equity.
Oh yeah. I mean, that's why the stable coins have seen so much interest. Like there was a high interest. I mean, you're just getting like really good. I mean, especially in the last few years, it was probably way higher risk. But now there's like all kinds of stablecoin stuff. I think that's why President Trump and so many others are pushing for a ton of. They're like, what are we going to do with this? Like, what is the answer? What is the move? So that way we can actually build from here. And I think a lot of people are going to find interest there. I mean, Cathie Wood comes out. I mean, I don't know if Cathie was the exact person to take all the financial advice from, but she was like, hey, I'm not sure if Bitcoin's going to go as high because I didn't realize so many people were going to go into stablecoins. And I was like, that's a good point. That's a good point.
Yeah, and the question is like, are we going to get to the point where like if banks do nothing, then enough consumers will find good vehicles to be able to do this on their own, where they're going to bypass it. And then if it gets large enough, then you say, okay, well, like then there should be some like rules around this because consumers could get hurt. So there is this like, okay, it's gotten too big where now you can't just ignore it. I don't know what that number is, but the banks can continue to try to fight and deflect, but eventually this will have to be part of like the domain, right? Like this is finance, this is people's money, right? Like, we can't say that like every time something bad happens, this is just like a Terra Luna type situation.
Of course.
Right? Like there has to be real, and like the argument of like here, like the government, like, no, this is the opportunity for the government and for banks and for the ecosystem to all have a seat at the table and say, okay, how do we protect customers? How do we like not just create regulation when things go bad? Then we have to put it, and then you overregulate, and then you stifle things, and then like in the mortgage side where you created a bunch of unnecessary regulation, which impacts affordability and a bunch of other stuff, primarily because you looked at it from a situation of like, how do we stop the worst case, edge case scenario, as opposed to like right now saying, no, like how do we protect customers, just knowing that from like a base case when things could be done proactively. And I think right now that's why there's no incentive to do it. Like if people would be losing money with stablecoins and other things, all of them would be running towards like, say, we have to put something in place. We have to regulate this. We have to basically create a structure to be able to protect consumers because their constituents would be asking for that. So whether they get it done now or not, like it will get done, and hopefully not at the expense of like something blowing up. But with kind of like firm footing on the ground saying, no, like we should actually think about this pragmatically and like in a way where we can say, yeah, like this is good policy. This is like everyday policy. And then chart it off where like when bad things happen, like that was just a bad actor. That wasn't the industry that was the bad actor. That was a singular company or institution that didn't have good practices. The way they basically blamed SVB, right?
Yeah. Dude, Robert, I thought that was the MSTR chart that you were pulling up there.
Oh, it's Citigroup.
It looked exactly like MSTR with that.
No, it's just one of the major banks in America.
Just casual. Good Lord, dude.
This is Wells Fargo during 2008.
Man.
I was just checking the decline. So it was about 81% for Wells Fargo.
That's unbelievable.
Well,
From
you could put up a Bear Stearns chart. That one looks even uglier.
Yeah.
Oh no.
Look at Citigroup. It was even worse. It was like gapping down.
Jeez, dude.
Even on the weekly. That's crazy.
Wow, that's incredible. Oh, that's interesting. Yeah.
Speaking of, by the way, to put a final point on it, Circle. We were talking about on I think last week's stream. Circle is up like handsomely.
Yeah, it had
the past couple days.
Holy moly!
Yeah, it had a really good bounce a few sessions ago.
64% over the past like five
yeah,
days.
I mean they had retraced a lot, and then they bounced, better volumes.
Very impressive.
Good. Looks like they beat on earnings. So.
Yeah, definitely. No, guys, look, this is a great conversation. And by the way, for people who are watching the stream right now, if you haven't already, definitely take a second and repost the stream if you're enjoying it, if you're learning anything. And, also follow along here at Wolf Bitcoin if you enjoy discussions like this. We do them all the time. Follow Joseph and Robert, both of them tagged right above us in the stream on X. And if you're on YouTube, head over to the description and you can check out them on X. Robert's also on YouTube. Oh, this is a comment. This is like, I just realized I didn't see this comment. It's just from like 15 minutes ago or something. But U.S. commercial banks lent over $1 trillion in 2025, $650 billion of which was in financial loans alone. Take a look at the H8 report. So, Origin, appreciate your comment there. And yeah, dude, we live in a clown world, dude. I don't even know what's going on anymore. I mean, it's a wild time to be alive, I will say. And interesting to see Bitcoin, holding these levels and not doing so bad. So, Robert, any last thoughts you want to throw in there? Last things you're kind of paying attention to for the rest of this week, if there's anything or any data you're waiting on?
Yeah, there's NFP, I think, this week, and obviously geopolitics.
Totally.
Everything going on in the Middle East. Yeah, and then there's NFP on Friday. But honestly, like what appears to be driving markets right now is oil, which is being driven by the war. So yeah, just trying to keep an eye on that best I can. It's quite difficult. It's quite difficult to keep up with what's going on there. But yeah, and then NFP will be on Friday, and I think that's obviously initial claims on Thursday. But yeah, I think that's it.
Very nice. Very nice. Joseph, any final thoughts? Last things you want to throw in there?
Yeah, look, just continuing to keep an eye on what Morgan Stanley and Citi and some of these other banks are thinking about. Just sort of product offerings. I thought it was pretty interesting that in spite of Morgan Stanley having a bank and having a bunch of different licensing and regulatory infrastructure, they decided to get a new charter for the crypto sleeve or bank or whatever they're going to call that. So I thought that was pretty interesting because they now set up a de novo entity alongside some of the other de novo banking entities that have gotten licensing. So I thought that was pretty interesting that they would decide to basically pull this out of the main business when you would have said, well, we have everything already in place to go after this business. They said, no, we're gonna do this in a whole different entity and structure and build from zero. So I thought that was very, very interesting to think about how they're going to attack this. And ultimately, I think that just puts their time frame of like when they can actually get out to market with different things much further out.
Yeah.
And I know a lot of people are looking at that pretty closely, like when they're going to come to lending, when they're going to go into custody, when they're going to do all these other things. Naturally, what they're saying is we are going to be a startup within a big institution, and push forward on these initiatives. And how do other banks approach this as well, and which are going to be the players that want to say me too, right? We want to compete for this customer, and then who are the companies that are in the space already that are the incumbents from a crypto perspective, but may not have some of the other parts, and who's going to be moving forward. So I think that there's going to be this mad race over the next 12 months where we're going to get all of these headlines, and then you're probably going to start to see some offerings come out over the next couple quarters, and it'll be interesting to see how that shapes out. So that's where I'm spending a lot of my time, is just understanding like what are the products, how do we continue to improve the offerings in a world that I think and expect that there's going to be a lot more competition from all sides.
Yeah, absolutely. And by the way, for people who are listening, if you enjoyed some of Joseph's takes, he is the CEO at Milo, who is long-term partners here at Wolf. And so for those of you who are long-term Bitcoiners or long-term holders of Bitcoin and you don't feel like parting with your best assets, definitely check out Milo. They've got a bunch of stuff. There's a link down below in the description on YouTube, and it's in the tweet below the stream if you're watching on X. If you guys want to find out more about some Bitcoin mortgage options they have, crypto loans that they're offering as well. If you're looking to get into a home and you don't feel like giving up your Bitcoin, they've got a bunch of different options for you. You can also shoot Joseph a message or the Milo account a message if you have any questions. They've got a bunch of great stuff, and stoked to be working together, Joseph. Yeah. Robert, Joseph, thank you so much for coming on, man. It's a great
Actually, want to flag something before we
please.
So we released something yesterday that I think a lot of people can appreciate. So if you go to our website on Milo.io, you go to the top header, there's a place where you can actually do a comparison calculator of a conventional mortgage and a crypto mortgage. And you can play around with the time horizon, what's your cost basis, home appreciation, Bitcoin appreciation.
Nice.
They can actually tell you, actually, if you want to,
I was going to say, let me pull it up here.
Pull it up. We can actually go through that. So that was a tool that we had been using internally But now, we're releasing it so that
Alright, so-
everybody can run their
Okay.
simulations.
Explore options, or where am I going here? Let me see if you.
So if
hold
you
on.
go over
we
to, so go to home financing, and then hit the last one there, which is mortgage comparison. If you want to just bump that out. So this will give you that comparison, right? So you can play with time horizon, how many years, you're planning on holding the property, home price, whatever you want to basically run for your assumptions there, the percentage of down payment, expected home appreciation.
Oh, interesting. Wow.
So now you can actually go and pick
Very nice.
your price, your basis, what you think appreciation is, and this will actually give you the calculation. So when you sell your Bitcoin, you're gonna pay some taxes. So it'll tell you, what your expected taxes are depending on your capital tax gain rate, right? Like, so if you're in, California or less states, so you can play around with all of these different assumptions over a long period of time, and it'll tell
This is
you.
really cool.
Yeah, this is pretty cool.
What this is. So I think this is a fantastic tool to be able to see. One of the things that we were always highlighting is what is like your true annual interest rate versus like your effective interest rate. So we wanted to highlight that because a lot of people, when they buy a home, they only think about what that mortgage interest rate is, and let's say it's 6% or 7%, but they always forget about what is the opportunity cost of the down payment. Now, if the opportunity cost of that down payment is actually investing in Bitcoin, then your true interest rate is actually significantly higher. Your effective rate is significantly higher. So that was something that we've always tried to basically reflect to clients, and most people never run that calculation. So that 7% might actually be an 11% if you hold it here. Now, if you dilute that over a longer period of time, then it starts to basically come down. The average hold time is about 5 to 7 years, right, for a home, right, for a primary home. So this gives you a lot of levers to kind of play around with the scenario, and you can also kind of like run for a lot of people previous sort of historicals, right? If you adjust your basis on your Bitcoin and your home price,
totally.
People, that actually becomes pretty painful to know how much they would have in Bitcoin terms if
it's incredible.
They were just held on to it. So I think this is a really, really cool tool. So
I love this. And this is, by the way, for people who are watching right now, this is that is the same link. It'll take you to that main site that I had, and literally just hit home financing mortgage comparison, and it'll take you exactly to this page that you're watching on stream right now. Definitely check that out if that's of interest to you. And like I said, you can always shoot Joseph a message. Shoot us a message if you have any questions. We can connect you. If you're looking to get something done, we got you. Yeah,
and if you actually scroll up to the top, if you scroll up a little bit, you can also basically share this on social. So we've got some nice, sort of social
Beautiful.
there, right, where you can share it on X. You can play around with different scenarios, and hopefully this gets people to actually do that. So you can run your scenario. You can actually share this link with someone. It'll actually capture and hold the variables. So you can share it with
That's incredible.
Friends and different people. So
I love this.
This is a cool tool for a lot of people too.
Yeah, absolutely.
Some real numbers on the benefits, right? We tell people the numbers, but they don't really understand it until they can.
Sure. I love that. I see. I won't pull up Roberts in case he has confidential information on there, but I see him filling it out right now. Very cool. Okay, well, listen. Hey, there you got everyone who's watching. You have homework now. If you guys have even a little bit of a smidge of interest, or even if you're not buying a home, you just want to kind of check it out and play around with it. That is very cool, Joseph. I appreciate you showing me that.
Yeah.
Look, we do this stream every single week. We come on here, talk about the markets, talk a little bit, talk macro, talk about what's happening, just kind of in the news. And there's a bunch going on right now. And so, look, if you enjoy these streams, again, follow along here at Wolf Bitcoin. We'll see you guys all in the next stream. Take care. Have an amazing rest of your day. See you next one.
See you.
Absolutely.